Hello friends, welcome back to my channel Aesthetic CA Shefaali. In case you are new to the channel, please don't forget to press the subscribe button and the bell notification to get more such informational videos in future. In continuation of our startup series, we will be discussing the credit guarantee scheme of Startup India in this tutorial. By the end of the tutorial, the viewers will be able to gain information on the objectives of the scheme, the different types of credit guarantee cover, the eligibility criteria for the startups and the member institutions, and the maximum exposure available under the scheme. So do keep watching this video till the end. Now let's begin by discussing the objectives of the scheme. The credit guarantee scheme of Startup India was launched by DPIIT and Ministry of Commerce and Industry to provide credit guarantee up to a specified limit in respect of the loans which were extended by the member institutions to the startups which were DPIIT registered and they were trapped in huge debt on account of the pandemic. The second objective for the scheme to be launched is to provide need-based assistance to the startups in accordance with the guidelines of the scheme, subject to the eligibility criteria and the viability feasibility of the project and compliance with the eligibility criteria of the startup scheme. The maximum exposure available under the scheme is capped at rupees 10 crores on individual case basis or the actual outstanding credit, whichever is less. Now there are two types of credit guarantee which is available. One is transaction based and other is umbrella based. So the transaction based guarantee is available to member institutions on a single borrower basis. However, the amount of credit available, credit guarantee which is available, varies on the basis of the original amount of loan sanction. So if the original amount of loan sanction is up to 3 crores, the guarantee cover will be 80% of the amount in default. If the original amount of loan sanction is between 3 crores to 5 crores, the amount of guarantee cover will be 75% of the amount in default. And for all the loans which is above 5 crores, the amount of guarantee cover is reduced to 65% of the amount in default. The second type of credit guarantee available is umbrella based cover. So this umbrella based credit guarantee cover is available to venture debt funds which are registered under the Alternative Investment Fund regulations of SEBI. The quantum of the guarantee is lower of the actual losses or a maximum of 5% of the pooled investments. To avail the benefit of the credit guarantee scheme of Startup India, there are certain eligibility criteria which the startups has to fulfill. So for availing the benefit of credit guarantee, all the startups have to be recognized by DPIIT. Secondly, they should have a stable income stream as per the monthly audited statements over a period of 12 months. The startup should not have defaulted in repayment of the loan to any investing institution, financial institutions or member institutions, and they should also not have been classified as NPA as per the RBI norms. Lastly, the startup should have fulfilled all the eligibility criteria and certified by the member institutions to avail the benefit of the guarantee cover. Regarding the member institutions, all the scheduled commercial banks and financial institutions are eligible to act as member institutions or lending institutions. The alternative investment funds which are registered with SEBI are also eligible to act as member institutions and provide funding to the startup subject to fulfillment of the criteria. The NBFCs which are registered with RBI are equally eligible to act as member institutions and lend the required funds to eligible startups. However, the NBFCs are required to fulfill additional two conditions, which is a minimum of BBB and above rating in addition to a minimum net worth of 100 crores. Now, if the rating falls below BBB, then in that case the NBFC will not be allowed to do any further lending or provide funds in future till the time the rating is restored to BBB. The National Credit Guarantee and Trustee Company is the trustee of the scheme, and it is NCGTC who actually operates the scheme. It is NCGTC who provides the credit guarantee to all the MIs in respect of the lending they have done to all the startups. The funding can be done in various ways. It is provided in the form of a venture debt or working capital. It can also be provided as a subordinated or mezzanine debt, in the form of debentures or convertible debt, or in the form of fund-based and non-fund-based facilities. So overall, the credit guarantee scheme of Startup India is a very positive move by the government of India to fuel up the startup ecosystem in India. Further, the scheme intends to lend the funds in a very transparent and objective manner, which will go a long way in providing all the required support in terms of the finance to the young entrepreneurs. This is all about credit guarantee scheme of Startup India. Do keep watching this space for more such content. This is Shefaali signing off.